and welcome to today's fast video, which is called CPI prospects and what would be the consequences. Today I will focus on equities. I'll be talking as well the muted entry to CPI announcement by precious metals and quite risk on positioning as seen through the dollar perspective, meaning those two key pairs, euro and yen. But starting with equities, you will note quite a few distinct resistances being tested, retested, nibbled at, turning into supports, breaking, seeing a break out above these, and then some kind of backing and filling. What I don't like is that the market breadth indicators had not been and are not looking all that clearly risk on, and those downswings have been relatively steep and fast. That's not without a precedent, and provided that what I see with the CPI figure being slightly on the other side, meaning 0.3 is more probable than 0.2 in my view, which would have a consequence on what S&P 500 would do in each case. I would be looking rather for within the risk on positioning as seen during yesterday's price action, where we had seen two good attempts at 6,015 following this level being overcome earlier in the session. We had seen prices not being able to break down below this area, let alone the 6,061. However, the picture is far from clear because oil and oil products had not been really trending lower in the reporting period, for which we will get inflation data. Here is the troubled sector, the troubled market breadth perspective, with the percentages of stocks trading above various periods of their moving averages, and this is the premium chart that I featured yesterday, and you can see as well the note. It's almost looking as a rising wedge. So a test, an attempted breakdown from this structure is more common than a successful breakout. This must be stated clearly. So this quite explains the really muted session and willingness of the bears to bounce on those two meaningful intraday opportunities yesterday. Sectoral view is being quite risk off as well. Forget for a while that communication services, for example Google, had been having a great day, or discretionaries. What Tesla does is one thing: pay attention to muted financials and industrials. This is most important to me, with tech kind of lagging behind. So much for the risk of perspective, and that's also supported by healthcare doing well. One of my stock picks shared with clients well before Monday's market open had been really, and it had been the leader of yesterday's session, scoring 4.5 in a single day. So much for the individual stock picks that I present to trading signals and stock signals clients. And here we go with the inflation projection and immediate history on a month-on-month basis. I'm still leaning towards 0.3 being the figure reported, which would, at least for a while, that must be stated, at least for a while, catch stocks a bit off guard. Whereas 0.2 would bring a very solid appreciation in the indices. And what would be the clue? What is the clue? What markets are still flashing for a couple of days, Russell 2000 outperformance. So make sure to make the most of what I do by combining the daily analytics with intraday channel, and talk soon again.